U.S. economy grew faster than expected in the third quarter by more than 4%, according to new government data, catching many economists off guard. American consumers continued to spend, mostly on travel, dining, and entertainment, becoming the main driver of growth, even though interest rates and inflation has been slightly elevated. Businesses also stepped up, investing more in equipment and technology, a sign that some companies are still expanding instead of pulling back. Government spending added a small boost as well. There are a few areas that may need to be tracked, such as exports, which may be feeling the impact of slower global growth, along with manufacturing activity, and mortgage rates in the housing market. Economists believe the resilience is real, and a good sign for Americans. And their hope is that this positive economic outlook does not negatively impact future interest rate decisions that will be made by the Federal Reserve. We will continue tracking the information as it develops.
New government data reveals the U.S. economy saw a major surge for the third quarter of 2025. Gross domestic product increased 4.3%. This was the highest jump in 2 years. Despite this, Americans remain uneasy about the economy. The Consumer Confidence Index fell 3.8 points for the month. Let's start with the GDP. What do you make of that number?
4.3% is really strong, though. So that is a very good sign, because you go back to the beginning of the year, we were talking about it. Remember, we had negative GDP quarter growth.
Yep.
And so if you think, though...
Talk about the R word.
Yeah, right, exactly. We were talking about a recession possibly, which never came to fruition, which is a great thing.
What does tariffs have?
So the president said that this is all because of tariffs. And in some respects, he's right. So the way that you calculate GDP is there are two components that are part of it. It's imports and exports. When you have really high imports, that counts against your GDP. And that's exactly what we saw in the first 3 quarters of the year when people were trying to get all the product in again ahead of those tariffs hitting. This time around, though, you saw exports really high. Remember, we have a lot of trade deals, a lot of countries committing to buying U.S. goods. So that's one piece of it. The other side of it, though, is that consumer spending jumped 3.5%. The second quarter was 2.5%. Everyone was celebrating about that. So it shows that even with tariffs and people concerned about higher prices, they are still spending.